Hello, welcome to another episode of my weekly analysis. Um, if you're watching this, then you've probably experienced one of the worst weeks to be trading this year. So far, so good. And it's just February, which begs the question of what's in store for the year. Notwithstanding, we saw some major reversals, particularly with the tech stocks. We also saw a jump in Bitcoin, gaining back over $10,000 after falling to 64,000 and now at above 70,000. So, what does this spell? Really, I already anticipated a market sell-off. I view this as a rebalancing in the market. It happens in the first quarter of the year where there's a decline, and it's an opportunity for investors to get into their positions for the year. So if you're a swing trader, this is the best time for you to start stocking up your position. If you're someone who holds stocks, this is the best time to buy stocks, and you hold it till the end of the year. You'll probably not see a decline like this unless there's a serious market crisis. A lot of people are already panicking. Oh, Bitcoin has crashed. Oh, this is happening. Oh, the world is coming to an end. But this is the moment. These are clear signs of when to get into the market. When there's the fear indexes, it's crazy. Like, a lot of people are so scared. This is the time where you go against the crowd. Same thing happens when there's greed. That, like, the greed index is so high. A lot of people are so buying the top, like we saw with gold last month. A lot of people were buying the top, and all of a sudden it just declined. Those are the moments investors are looking to sell their assets, when there is like a huge rush to get into the market. So it's a vice versa thing. So what this means is that we're still going to have a recovery. We've seen Trump come out yesterday to say that by the time he's done, that S&P 500 is going to be at 100K. He said that NASDAQ is going to jump, it's going to double its digits. These are just telltale signs or fundamentals that you need to follow to show you that, okay, not necessarily that in the long term he's going to be correct, but that you can actually react to that news right now and see how you can capitalize on that. So I'm going to be diving into the charts on NASDAQ, continue from where we stopped last week, give a quick recap of how the week went, and an analysis of how the new week is going to begin. So leave a like, share, subscribe, and thank you once more for always coming to watch my videos. Let's dive right into it. So we're back on the charts again today, 7th of February, just a week after our first weekly analysis. And from my last video, you can see that we're back in this range again. This range from December 2025. But what's different now is that we've managed to take out all these resting orders or liquidity. And after that, we've had a major rejection, which signifies some sort of bullish momentum in the market. But that's not enough to have a decisive argument that we're now bullish. But going down the daily time frame, it further buttresses the argument that we are now bullish, because just on Friday, markets open with this, we managed to sweep Thursday's low and form the reversal on the lower time frame, and we took out Thursday's high and closed with an engulfing bullish candle. This normally means that the buyers have taken over. So same thing played out on the lower time frame. We saw price respecting bullish PDRAs. On the 4 hour, it's not quite clear yet, but on the 1 hour time frame, we saw a decisive push above the EMA. And just right at 9:30, we saw price tap into this imbalance on 1 hour and continued pushing up. Now, could this be just a repetition of what happened last week, Monday, when we had price reverse all the way here and turn around? Yeah, could be. But right now, we have more arguments in place because we have fundamentals backing us up. Just after market closure yesterday, we had Donald Trump making a remark that by the time he's done with his presidency, that the stock price would have doubled its price. Quite tricky for someone to say, but as traders, you have to take some of this information and try to capitalize on them. The market is definitely going to react to those remarks going into next week. And so that's why I've tried to inform myself that we should start looking for the buys right now. A lot of people are still anticipating some more decline, but I think we're done with the decline for now. Like I said earlier, this is just a clear case of rebalancing. So if you want to see how whether this has happened historically before, you can see it here. This was November, not here. Okay. You could see it here. Yeah, this is it. So in 2000 and in 2024, just right after the first 3 months or first 4 months, we saw a decline just similar to what we're having now. And I'm sure if you ask traders when they were trading this, they'll be saying, oh, we need to come and take out some other liquidity and all that, all of the whatnots. But we could see how price immediately reversed. And not only did it do that, but it continued rallying for the rest of the year. So another decline around August, which was consequently a fundamental I'm still yet to research on. But we could see that anytime we have this sort of huge downtrends, there's always a recovery that eventually just takes out the original high. So this is not really so significant, which is why I'm just like, so I'm just amused with how the market is reacting to just a slight decline. I mean, this happened under Joe Biden. The other ones I showed you happened under Joe Biden, and there wasn't any outrage then. But it's crazy. That's not our concern anyway. So, but I've seen that we are bullish now. So going into next week, I'm anticipating some more buys and going to see if we can use some. So the imbalance I'm looking at right now is this 4 hours here. So I'm expecting if we don't gap up on Monday, I'm expecting that if we just open where we are right now, the price would sort of do this. Okay. And, you know, the level of liquidity, my drawn liquidity would be this previous week's high, which was, I think, Tuesday's high or Monday's high. So it's pretty simple. We're still stuck in this range, so we still have to play according to the rules that I already stipulated, which is always wait for liquidity to be swept before taking any entry. If not, you're just going to be caught in a chop. Yeah, so you can see here on Monday, after we had that huge Monday spike, which kind of told me that okay, we're bullish, kind of convinced me that we're bullish. We saw the next day sweep that high, failed to continue and declined. And then we saw the next day after that, which was Wednesday, take out that Monday's low. So after that, we saw a continuation as well. But on Thursday and Friday, we saw Friday's sweep, this, which is similar to this, okay? Just an inverted version of it. Swept this and continued and closed above this. So with this in mind, I'm expecting that at least the next candle should be a bullish candle to maybe take out this and, you know, probably take out this liquidity here. But ultimately, my drawn liquidity for next week would be this zone here. So I am primed to take my first position on Monday right inside this 4-hour fair value gap. So we'll see how Monday market opens and we'll try to capitalize on that. Thank you wherever you're watching, and we'll keep dropping videos like this. So please leave a like, share, subscribe, and I'll see you in the next video. Thank you for watching. Have a great weekend. Have a great one. Bye.